Hey gang, Roger Scott here. I'm flying back tomorrow on Thursday, and I'm going to be flying in the morning, and I won't have time to do this video. I'll be flying out. I'll be leaving the hotel room at like 5 a.m. But I wanted to do tomorrow's video tonight to give you a heads up of what I'm seeing in the market. I didn't want to leave you hanging. Now, again, before we begin, like the YouTube Wealth Press channel, subscribe to our videos, like our channel, like our videos. That gives us a big help with YouTube, and join our Telegram channel. Most importantly, opened up my VIP room for the summer for free, no cost. It's happening at 10 a.m., and Matt will be hosting it, and don't miss out. He's got some hot stocks. I've already given him the picks that I want him to go over. Don't miss out. Again, I'm doing this Wednesday night. It's about 5:15 p.m. I wanted to do it after earnings came out and after the Fed announcement to give you some perspective of what I'm seeing. So Mr. Jerome Powell squirrely came out, basically did exactly what we thought he was going to do. He was pretty moderate in his speech in terms of future moderation, basically more and less. Basically, we're going to do more, but we may do it in not as incrementally as we've been doing, which is door number two, which is I expected. Now, interestingly, the bond markets had no reaction. More importantly, the bond market folded to the downside. I mean, it was only up 10 ticks. I am not liking this trading action. If the Fed's announcement couldn't curl bonds or squeeze bonds to go up higher to the 104, I think the odds are a little higher than they're going to come back down to the base. Instead of coming up. I thought today they would definitely come up, but no soup. Tomorrow, the big report, and this is going to be a big one, is going to be the GDP. Pay attention to the bond market before the opening bell. If it doesn't clear, and again, the only reason it would is if the GDP report is bad. Remember, we're in an inflationary environment where bad news is good news and good news is bad news. It's really weird. But basically, the reason the Fed would slow down is if the GDP is really bad, if the growth is out of control, meaning inflation is still not tamed. So if we get a lot of evidence of that, you may see a rally. But if you don't see a rally in the bond market, I honestly don't see a major catalyst to see the bond market rally from this point on. So that's the first thing I wanted to talk about, something that's really important right now. Excuse me. The second thing I wanted to talk about are the blue chips, are the tech stocks. So Amazon is going to report tomorrow, and as you can see here, it is already below the trend line. Now, again, we don't know what's going to happen, but I don't like this trading action. This is very sloppy. I mean, I like 2-3 down days. I like this. This looks good, but it flopped, and it's been going down several days without a lot of buyers stepping in. Now, it's right now near a support level. If Amazon breaks this level, there's really nothing there till 120. Now, I don't have a crystal ball, and the one I have, as you know, it's made in China, and it doesn't fire on all four. But seriously, I mean, I don't know what's going to happen with earnings. I don't know what Jeff Bezos is going to do. But technically, Amazon does not look great right now. This is not a good pattern. Matter of fact, this is a descending triangle. Descending triangle. Descending triangles typically break to the downside, and not seeing a lot of love here. Again, the only thing it has going for it is it seemed to have went to the low of this lower level, but it hasn't broken it yet. But if it does break it, we can have a nice little precipitous movement to the downside. Now, good news is this. So far, Google did pretty good, right? Google didn't do bad. Google's numbers were better. The stock continued to rally. Microsoft didn't do so well. But see here, it's closed above that level. I drew that level before the earnings. And most importantly, tomorrow you have Meta, where I think Meta came out just now. Yeah, it did. It came out. So you've got a positive on Meta. You've got a positive on Google. So tomorrow, if Amazon is positive, that's 3 out of 4. So remember, there's only 7 of these. So again, this is positive, and this will cause the market, especially the tech or communication sector, to show some strength. Now, talking about it broadly, let me just look at the QQQ right now. The QQQ doesn't look bad. I know a lot of you were thinking I was going to say it's bad, it's due to fall, but actually, with the fact that Meta's good, Google is good, Microsoft not so good, we'll see how Amazon does, but this is not turning out bad. This low is higher than this low and this low and this low. The lows are getting higher. We're turning around after a few down days. I mean, I'm not loving this gap or this down bar, but it has held up remarkably well in light of the recent action and in light of this recent ascent and in light of the earnings action that we have seen. So I'm not that bearish, and if we can get a good move on Amazon tomorrow, or a good number on Amazon tomorrow, we could see a tech rally. Now, this is important because, as I mentioned before, if you look at the short-term scan, communication, consumer discretionary, technology, on a 1-week basis, it hasn't been doing well at all. On a 3-week basis, communication services, consumer discretionary, still in the lower part. Now, 6 weeks, you could see that it's really gone down. It was here's QQQ in the middle. So in the last 6 weeks, QQQ went from being kind of strong. 8 weeks ago it was really strong, to kind of being moderate to now being sort of weakish. So this could really spruce up the technology sector, or Amazon's going to be a big maker or breaker, because so far you've got Microsoft that did bad, but you got Google and Meta that are good. So Amazon may be a tiebreaker for the time being. The S&P 500 is still looking pretty solid. I mean, there's no sign of breakage right now. But again, blue chips, I mean, look at this. Blue chips are controlling market action at this time. Again, tomorrow is going to be a really big day. Keep your eye on blue chip stocks, because tomorrow is a very interest rate sensitive day. The GDP can really pull the rug from underneath the Fed, or it can reinforce what they're saying. But again, earnings so far are not as bad as we thought. FANG earnings, I was really worried they're going to be awful, but they're not, which is really great. Let's look at small caps real quick. Let's look at the Russell 2000, see how it's coming off of those levels. It's still sticking around here. Now, if it breaks above here, it will have made a break above a major resistance level. This occurred about a year ago. So multi-period resistance level, and we can be up for another break up to the 211. But I am very skeptical. I'm very skeptical that we're going to break this level. I actually think we're going to come back down. So be careful with small caps. And as far as relative strength on small caps in comparison, let's look. 6 weeks ago, you had the Russell 2000, let's see, 14, 15, is 1500 in the bottom. Let's see, 3 weeks ago, closer to, look at that. No, that's the Russell right here. No, that's the mid cap, excuse me. I'm losing my mind. Where is... Oh, I have the IWM here. IWR. I need to put IWD in here. 1 second. Let's change this. Let's change this puppy out. This is what's confusing me. All right. Let's save it. All right. My filters. Let's see here. Did I save it or did I not save it? Maybe I didn't save it. I don't think I saved it. Let's save it this time. IWM. Let's do it the right way, right? There we go. Save. Now let's look at it the way I wanted to look at it. All right, so 6 weeks ago. Why does it say that? All right, I'll fix this. But anyway, mid caps were leading. It should say small caps. Why does it do that now? Huh. Let's fetch. Oh, there we go. Yay, I fixed it. Okay. All right, so 6 weeks ago, small caps were still in the upper end. 3 weeks ago, small caps were, where are those darn small caps? All the way on top, so they're going stronger. And now small caps, over the last few days, they're falling down. So to me, it looks like they were kind of strong 6 weeks ago, peaked about 3 weeks ago, and over the last 7 days have lost strength to energy, utilities, healthcare, basic materials, and consumer staples. Now, honestly, if I were you, I would be focused right now on energy, utilities, healthcare, materials, consumer staples, and financial, which are outperforming the Dow, is a very good sign when the subcomponents of the index are outperforming the index itself. That's a very, very good sign. So focus on the blue chips. I like energies and utilities a lot. And before I let you go, and folks, you can always email me if you have questions. Now, What's my top ETF pick for the ETF? It's energy, and let me give you an option. Let me give you an option on XLF. Oh, that's financial. Let me go to energy. There we go. We want to go about 23 days out, and we want to go to the 86, 87, somewhere in this ballpark. 86, 87, plenty of open interest and liquidity. You could even buy the 86, and you could sell the 90. It's over 50 cents. And you got 4.5 points. And if it doesn't do anything in the next few days, 7 days, get out. Now, before I let you go and send you on your way and go packing for my trip back home tomorrow, millions of people play the lottery each day, hoping upon hope that they'll hit the next big winner, right? But the reality is it's a pipe dream. For the mass majority of us, financial freedom doesn't happen overnight. There's no easy road out there. It happens bit by week, bit by bit, week by bit by week. It's not going to happen instantaneously. And that's exactly what Tom Busby's Weekend Side Hustle aims to help everyday regular folks like you do. Stop gambling. Start targeting extra income with a historic edge every single weekend. Let T-Buzz show you how to. Click the link below. Get started right now. There's a link below this video. I'll talk to you later. Have a great day. Always reach out to me. Support at marketgeeks.com. Bye.